Okay, a little add-on that we have here regarding financing and a pre-approval letter and what is the best loan. There's a whole bunch of questions in regard to financing that should be addressed by a professional, in my opinion, because now there's 40-year mortgages, there's 30-year mortgages. It really depends upon the down payment, the type of financing, is an FHA or conventional mortgage, and what are the things that you can recommend to your client. I mean, where this conversation started was that it's like, what are interest rates? And that's really important. So the second question is what's your principal, interest, taxes, and insurance payment? That really is the question. It's like, as a real estate professional, when you're working with somebody, it's like you're going to get that and you're going to have to guide that client. And that's your job, that you committedly make sure that the client is taken care of to the best of your ability. And in my opinion, it would be best to take and refer that individual to a loan officer. But a lot of times somebody will just ask you in passing, right? Hey, what are interest rates? And then here's the answer to that, right? So it really depends upon the term of the mortgage, because 30-year mortgages, the interest rate is more expensive than a 15-year mortgage. And many times the shorter the term, the interest rate is actually a little bit lower. So there's a starter. And then really the thing to ask about that client is, are you going to get a conventional mortgage or an FHA mortgage? What is your down payment going to be? There's programs, FHA has financing programs is 3%, or is it going to be a conventional mortgage with a 5%, 10%, 15, 20, 25%? It really depends. And is it going to be a credit union? Is it going to be a big box bank? Like, where's that money coming from? Now, here's something that I didn't cover before, and this is notable. So the question was, what is my interest rate? And the customer, they want to know that, but there's more. They want to know, as I mentioned before, what a principal, interest, taxes, and insurance payment is. So why not tell the customer, look, I want you to educate yourself as much as you possibly can, and a recommendation that I have is pick out a house that you think you can afford and go get a principal, interest, taxes, and insurance payment. And this is the important one. This is something that I didn't cover in the other video. You want to actually call an insurance agent and say, okay, about how much is my insurance payment going to be on a $200,000 home? Something that is, and then just start making up something that's 1,400 square foot, 1,300 square foot, and then the type of insurance on that. This gets complicated quickly, because insurance is something that, is it going to be a complete replacement? Is it going to be just to cover the mortgage? What kind of insurance in the first place are you going to get? And the individual that is taking out that insurance, is it in addition to homes that they already may have? So the rider may be actually cheaper. Like, for example, myself, I own a bunch of stuff. I own 15 houses, literally. And my insurance is a touch cheaper because I've got a blanket policy, and it's, So you have to start there, and then I would recommend that you actually say to the customer, you might want to call an insurance agent and get a quote on a fixed rate of insurance, let's say a purchase price of $200,000. And then the next thing to do, in my opinion, is also, what are the taxes going to be in the area that you're looking to purchase? Wherever that is, East Grand Rapids, Forest Hills, Grand Rapids proper, and get a ballpark specific amount of property taxes, because if you have a fixed how much your insurance is going to be, and then what are the property taxes, ultimately what you want is the agent, the loan officer, to do a principal, interest, taxes, and insurance payment, right? You don't want an estimate of taxes. because the estimate might be different. It's a good idea to shop for money. It's like it's a really good idea to take and communicate to that potential purchaser. It's like, well, you asked me originally what the interest rate is, and that really depends upon you, your income, your credit score, if you're going to get a 15 or a 30-year mortgage. So it really depends upon you and your needs. And are you going to consult with your accountant or your attorney? Are there going to be any other individuals that you're going to want to consult with? And getting back to shopping for money, that's just smart. I recommend at least 2 places that you shop for money and get a principal, interest, taxes, and insurance. Be sure that you get a fixed amount in regard to the insurance, fixed amount in regard to the taxes when you get that estimate. And then you're going to be able to compare apples to apples. Another thing to ask the loan officer that I didn't cover in the prior video is that in some situations you can buy down the interest rate. Listen to that. So in many interest rates right now are like, a couple percent, 3%. It really depends upon what's going on with the mortgage. And you might want to inquire. If you're going to be a long-term prospect where you're going to buy a mortgage and you're going to be there for the next 15 years that that you're dug in, you might want to take and buy that mortgage down and pay money up front to buy the interest rate down. Ask the loan officer that you're getting the mortgage from in regard to what is the next lowest tier regarding the mortgage rate and how much money is it going to cost me to get there. And this is the important part. How many years do I have to stay there in that mortgage to recoup my money? Back years ago, it's like the rule was if a mortgage dropped a couple percent, it was time to refinance because you'd save money, which is, nowadays is that if the interest rate even falls 0.75%, you really have to ask the loan officer to professionally calculate what that is, what that buy down is, and when you get your money back, because it's time and money. So to recap that, when someone asks you the question, what are interest rates? That's a big kettle of fish. And you got to figure out what's going on with that client. So really depends upon them, right? Well, what's your credit score? Are you going to get a 15-year mortgage or a 30-year mortgage? How long are you going to stay there? Do you want to buy your interest rate down? How much do you want your payment to be? So there's a lot there. And I recommend strongly that you shop. Call your insurance agent for homeowners, figure out what kind of homeowners that you're going to get. Take any house, about in the price range that you think that you're going to purchase, get a fixed rate regarding the taxes, and then what you want to end up with is a principal, interest, taxes, and insurance payment. That's my recommendation. Good faith estimate in writing of all your costs and charges. That's the next one that you're going to have to wrestle. It's like, great, you figured out what the payment's going to be and you got that done. I'd want to see all my costs and charges, every one of them. And you can request that loan officer in writing provide that to you, or don't do business with them. And you can just be nice about it. Tell Mr. Buyer to say, it's like, after you figure out your fixed rate and figure out your interest rate, you just want somebody that puts something in writing. And you can also provide that service to take care of that client by saying, there's too many surprises as it is, right? I just want to make sure that this goes good for you. Here's my recommendation, right? Taxes, insurance, good faith estimate in writing. We started way 25 minutes ago with what are interest rates. It's a deep pool, and get that. And there's many ways that you can take care of your client and provide service. How much time is this going to take? I mean, that's how many questions you got, right? I mean, some people, they don't care about all this information, and gently, you know, please cover the information because I really recommend it. Be as thorough as you possibly can be, but it really depends upon the client. How many questions are they going to have? And I really recommend this, like number 6, right? Have them start a list, right? The journey is a long one. It starts with the very first step and it gets right back to what are interest rates. One of the things that you can help the client with is you can kind of lay that out in front of them. It really depends upon you. Do you have a pencil and a piece of paper? I just kind of want to go through this with you. A couple recommendations that I would make is that, you know, do we want a 15-year or a 30-year mortgage? Do you know? The interest rate really depends upon you. Do you know exactly what your down payment's going to be? I mean, it's a regurgitation of that same information, right? But still, it really depends upon how many questions that they do have and how long they want it to take. It's really dependent upon them. My name is Michael Ross. I really appreciate you watching my video. I hope that you found this informative. Please smash that like button if you found this informative. Thank you very much. Please call me anytime.